because there's always that lingering concern that if the Fed cuts too soon and too fast, inflation could pop back up, which would be sort of a political worst-case scenario for Trump and just very difficult for consumers.
Welcome to Reporter's Notebook, where we talk to the Washington Examiner's top journalists about the stories breaking on their beats. I'm Jim Antle, and I'm joined today by economics reporter Zach Halaschak. And Zach, big news out of the Federal Reserve. We've seen all the inflation data, hasn't necessarily been all that encouraging, and nevertheless, another interest rate cut.
We had our second interest rate cut of the year, music to, I'm sure, Donald Trump's ears and his allies in the White House, who've been pushing for months now for more interest rate cuts. They would obviously like to see rates go much lower than the quarter percentage point rate cut that the Fed conducted this week, but it's still progress in the right direction in their eyes. So it's kind of a complicated picture that the Fed is dealing with right here. Inflation is still too high, as you mentioned, around 3% in the most recent reading of the Consumer Price Index. And let me just back up for a second. So all these inflation reports, the CPI, as we mentioned, PPI, the PCE, a lot of these have been delayed because of the government shutdown. So this month it was kind of difficult for the Fed because they're kind of running, in some sense, flying blind here. But the Consumer Price Index, the CPI, was released, so that gave them a little more insight, and that's running about 3%. So the complicated picture with inflation running too high, but also concerns about the labor market slowing. And again, we don't have any employment reports because of the government shutdown, which also makes it hard, but there's some private groups that conduct their own employment surveys. ADP showed jobs contracting the last month it was surveyed. So there's other indications that the softening might be continuing. So the Fed, kind of weighing those two, said, yes, we're going to cut one more time. But what was most interesting was after this, there was kind of this baked-in assumption in the markets that the Fed was going to cut again in December, which is the next meeting it holds. And Powell kind of pumped the brakes on that during his press conference. He said it's not a foregone conclusion, and stocks kind of freaked out of that because they like certainty, and they were kind of expecting another rate cut in December. But again, I think it's still more likely there will be a rate cut, but I think he's just kind of saying, let's take a step back. We don't even have all the data. How are we going to telegraph what we're going to do 2 months from now when we don't even have this data? So it was an interesting press conference. You also had some kind of interesting things that came out of the meeting itself. Two different people on the FOMC, the Federal Open Market Committee, actually dissented, so they didn't agree with the 25 basis point cut. One was Stephen Myron, who wanted a bigger cut, and he was, if you remember, the guy who Trump appointed to replace the outgoing Fed Governor Adriana Kugler. So he wants to see bigger cuts. He dissented at the last meeting, say he also wanted a bigger cut. So if he were in charge, it would probably be a whole percentage point lower than when before we started pivoted to cutting rates. And then another person on the committee, kind of showing the split, actually didn't want to see rates cut at all. They wanted to see interest rates held steady until we get more information on inflation, because there's always that lingering concern that if the Fed cuts too soon and too fast, inflation could pop back up, which would be sort of a political worst-case scenario for Trump and just very difficult for consumers.
Yeah, I mean, we're in a weird holding pattern because, as you say, we're getting an incomplete look at the data. We're not getting all the normal reports that we would normally get because of the government shutdown. Inflation is certainly significantly lower than it was when it was running at a 41-year high, but it's cumulative.
It's not 8%, but yeah, it is cumulative.
Not 8, not 9, but it's cumulative, so prices are still a lot higher than they were a few years ago. And it's still, it's not just a tick above where the Fed would like to see it.
It's a full percentage point
above. Full percentage point.
That's notable. And you mentioned cumulative inflation. If you're an economist and you're sitting there, you measure things in a one-year basis. Annual inflation is running at 3% because a year ago today, inflation was 3% lower. Inflation's 3% higher now than it was a year ago. If you're just the average Joe, who's going to the grocery store and looking at the electricity bill, you might be not measuring exactly a year. You might be saying, a few years ago I was paying this and now I'm paying this, because 2 or 3 years of 3-4% inflation really does add up.
And inflation had been a non-issue for so long, really well into the lifetimes of a lot of adults now.
I think a lot of people didn't even think about it as an economic factor for many years. It really came as a shock in that post-COVID era when the Fed had cut rates to zero, and it just shot up out of the blue, sort of. And for a while, even the Fed seemed to be caught flat-footed. They didn't really raise rates. And in retrospect, Fed Chair Jerome Powell has been like, yeah, we could have probably done a little more a little sooner to not allow this to get become such an out of control problem. But yeah, it's really a generational issue that happened here. I mean, we haven't seen this since like the 70s and yeah.
Real early 80s. Yeah. And so the federal government is still shut down as we're filming this. It doesn't seem likely to reopen soon. One of the first real consequences that people who are not the furloughed federal workers are going to see is going to concern SNAP benefits. Talk us through that a little bit.
Yeah, so essentially what's going to happen on November 1st is 42 million Americans who receive food stamps, or SNAP as it's known, are going to basically lose those benefits. They're not going to be able to get those. And this is something that Democrats are saying the White House is doing purposefully by disallowing a contingency fund to be used for this. The White House says it doesn't have the authority to use that contingency fund. That's up for debate in the courts. I think 25 states have sued the Trump administration over withholding the use of this $6 billion contingency fund. And even if it was used, that wouldn't cover the entire month of November SNAP, which is somewhere in the range of $8 billion, I believe. So thered be about a $2 billion short gap. But Democrats on Capitol Hill, I was at a press conference yesterday, they argue, they should be doing something at least, get out as much as they can now. We'll see how that works out in the courts, but in reality, it appears very likely that we're going to trip over this deadline and people are going to lose some of those food stamp benefits. And that's, a political hot potato, because that's a lot of America. It's about 12% of the country, 42 million. And, I think it's really going to come down on who gets blamed for this, because Republicans are saying it's Democrats, and rightfully so. Democrats could right now, if they got in there, they could vote on a clean CR and open up the government. But on the other hand, Democrats are saying if we don't do this, they're trying to exact leverage on, premium, Obamacare subsidies. ACA subsidies. And they're saying if we don't use our pressure here and the leverage we get, then all these Americans are going to see their health care shoot up. So it's really a tough challenge to see where the public opinion lands on that. And recent surveys have shown that there's not really a clear, winner. And a lot of political scientists and economists I've talked to looking at this are like, until there really is a galvanized opinion on who's the loser here, who's the winner, it seems like they're kind of locked horns, both sides. So who knows how it'll shake out, but I think once these SNAP beneficiaries start not getting those food stamps and they start calling their lawmakers, you might see more pressure put on those, and people might be more likely to make a deal on Capitol Hill.
And you'll have some of these people who are representing competitive districts who are up for re-election next year.
Yeah, exactly. And some of these states that are considered swing states, I'm thinking of Pennsylvania, Michigan, states like that, they have actually higher shares of people on food stamps than the 12% average. I think Michigan and Pennsylvania are both 15%. So I think once the politics comes into play and it kind of intersects with the policy on this, you might see a little more cooperation towards some form of deal.
Thank you, Zach.
Yeah.
You can read Zach and the rest of our policy team's coverage at washingtonexaminer.com.